Well, Sridhar Sivaram is with us, Investment Director, Enam Holdings. He's with us here in our studios. What a morning, Sridhar.
Thanks for inviting me.
So, what's the playbook here?
I mean, if anybody knows exactly
how do you even
playbook.
talk through this?
So I think the way you guys have also evaluated it quite well, that it affects a few sectors. They have specifically exempt a few sectors. So like pharma, electronics are out. My gut feel is that pharma will stay out. I mean, it's very difficult to precisely say, because if I look at what US is trying to do, and also the RFK Jr., who's the health secretary, they've been trying to bring down healthcare costs in the US by putting a 50% tariff or 100% tariff on generics doesn't really help their cause. So I think they also understand. So if you see specifically certain segments have been exempt. So I think this is give and take situation, but obviously some sectors do get affected. And I think the overall relationship has got affected more than anything else. And I don't know how that plays out. That is the thing to watch out. Maybe there are newer alliances which are cooking up. But I think this is not a good time from a market standpoint. There's so much of uncertainty right now.
Yeah.
So
There's no point talking about which sector or that sector, this sector. What do you think has gone wrong, Sridhar, in your opinion? I mean, you're a close watcher of global stuff. I mean,
So what I hear, from Delhi sources is that something changed after the war with Pakistan. And something related to, the hill that we bombed. And there are rumors about some nuclear sites there. So it's not very clear, but something has happened there, because till the day before that, US said that we don't want to be involved. And the day after that, everything changed. So I think only, people in Delhi will know exactly what has happened. But if I look at chronologically from that day onwards, the tone of Trump also changed.
Yeah. This is the Kirana Hill bombing. And I remember we discussed this internally. I was discussing with a couple of people as well, that whether that'll have, and the position that the US took after that day, whether that'll have a bearing on trade or not.
I mean, this is my guess. Okay, I think something has happened there. We will never know the full story. But there are a lot of reports, floating around as to what was there in Kirana Hills. But I think that has changed, because it looked like India has a dominance in certain military capability, which surprised US and Europe. So whatever be it, that may have played.
And also to Sridhar's point, I mean, just bringing it back for viewers' reference, the point on newer alliances. Yesterday, China's statement in support of Brazil and talking about the BRICS needing to be strong, a strong global south. I think it's a very, very interesting geopolitical times. But
so I think these are moving parts right now. We'll see how these things play out. But these are uncertain times for the market, and I think you can sense it in the market, right? It's not like our markets are running away.
And this is nothing new, right? But it just makes no sense, right? I mean, at a logical level, I mean, you are, for years, what was the one big consensus in Washington, in the US, was that everybody, Republicans or Democrats, are anti-China, right? That was the only thing they agreed on. So how is...
That's what I'm saying. What changed? I mean, chronologically, if I look at it, that is the only thing that changed. That something has happened there which has spooked the relationship. And maybe it was an unwritten rule. We don't know exactly what has happened. I mean, we may never know what has happened.
We'll never know.
We may never know. But obviously from that day, something has changed. It is for the experts and others to, dig deep and find out. But we may have some, some stories for that. But will I know for certain? No. But something has changed from that day. And we can see that playing out.
All right. That was the question, Sridhar, if I can go back to it. Yes. I mean, how much worse can it get, right? Earnings, Trump tariff tantrums. Are we close to bottom?
So we've seen I would say a time correction for almost a year now. You look at large cap, mid cap, small cap, almost all of them have been flat to mildly negative. And I think if you go back a year before that, I mean, which is exactly a year back, I mean, the consensus was that we had a very strong run-up. And we had earnings disappointment, which came through. I think the earnings disappointment may continue for maybe another 1 or 2 quarters. Finally, it's only when earnings start to, come is when we see the markets go up. We may see some more time correction, maybe for another 3 months. Very difficult to gauge this. I do expect that second half will be better, which is festive season starts early this year. So you could see a slightly better, outlook. Also, what I'm gathering from my Delhi sources is that some big announcement on August 15th. I don't know what, I have no clue, but this is what I've been told. Some big announcement on August 15th. Obviously, if you see the Twitter feeds of various people, they're talking of some reforms. I don't know what reforms, I have no idea, but I hope the government wakes up because we haven't seen any reforms in this term. So hopefully it's overdue, and we always do well when we are faced to our backs facing the wall.
You know, one of the I remember speaking to two economists based out of the US, and both one was from Princeton, the other one was from another university. And both actually were saying that maybe this will force, it'll kind of watch exactly what you're saying. I mean, us to do things which needed to be done. Maybe it's an impetus, which is not necessarily in the long. It looks tough now and looks, it's like, you're forcing us to do it, but in the long run, it doesn't hurt. Actually, it perhaps helps. Pankaj Tibrewal is with us as well, founder and CIO at IKIGAI Asset. Pankaj, good to have you with us here on the program. Thanks very much. What is your assessment? I started by asking Sridhar, how do you even sort of talk through some of this 50% business? What is your sense on markets? Let me actually put it in a very sharp way. Is this likely to today is absolutely steady, nothing really, but is this the way you think it'll likely be, or slowly, this kind of starts to seep in, worry? As Sridhar also pointed out, even if this 50% eventually is negotiated lower, the broader question is the relationship perhaps is soured and that needs repair. And foreigners have been big sellers, right? $10 billion this year so far. So that's the question, Pankaj, for you to start with.
You're on mute, Pankaj.
Yeah.
So, Prashant, if you look at tariffs, 25% or 50% doesn't matter because no businesses operate at such high margins that they can absorb 25% or 50%. So it's a number. But what it brings is a lot of uncertainty, and markets don't like uncertainty. And I think my sense is that we have to look inwards. And as Sridhar mentioned in his earlier remarks, that we haven't done anything on the economy side from a government perspective. I think it's time to probably think inwards and start doing the reforms, because if you put numbers into perspective, our senses, excluding pharma, electronics, others, $18 billion of exports get impacted. And that's roughly about 0.4% of GDP. How do you negate that? I think it should be the brainstorming which should be happening among corporate India as well as government. And I think this is the time to escalate going forward. Look at what China has done in the last 3 months. There was pressure on tariffs and other issues, and they have moved into the anti-deflation mode. And last 1 month to 1.5 months, all commodities are climbing up massively, whether it be coking coal, polysilicon, and they are announcing projects which the world hasn't heard of. The latest hydro project, $170 billion, and so many other projects will follow into it. I think we have that appetite to do as well. So in the near term, I think uncertainty will be large, but I think markets are behaving very maturely if you look at for the last few weeks. But one thing to note, Prashant, this is not an easy market. Market breadth is narrowing down substantially. The easy money, which we saw for the last 4 years, I think is behind us. I think markets are rewarding growth and earnings over a period of time. And if you look at the last 1.5, 2 months since the market has been correcting, there are only few pockets which are performing. Otherwise, it's a very, very tough market to generate returns.
Hi, Pankaj. Good morning. Good to see you. And it reminds me when I used to come home from an exam and Dad used to ask, how was the exam? I used to say, it's difficult. He said, exams are meant to be difficult, Nigel. But this market's tricky. And you have to look at, various segments. I think one segment or one piece that you have liked is chemicals. I recall a few months ago, you had called out for the bottom. And from there, actually, quite a few stocks have done well. Would that be one of your top themes that you still believe presents an opportunity?
Yes, I think, Nigel, if you look at the overall chemical segment, barring the uncertainty in the near term, there are two big macro developments which are happening around the globe. One, I think China, as I mentioned, has moved into the anti-deflation policy, where chemicals has been one of the sectors where they have created enormous capacities. And if you look at in the last 1.5 months, all chemical prices have started to inch up, and it's the government dictate that please close down excess capacities in China. So that's a very, very important point to note. And the second important point to note is that the large chemical companies out of India cater to agro. Very few cater to pharma. And from an agro perspective, for 3 years, we saw a destocking cycle happening. Our sense is that that's coming to an end, and probably the order inflows and the demand from agrochemical side will start to escalate. And the third most important is that we are calling for a Europe upswing in the economy. Our sense is markets follows first, economy follows later. And in Europe, we are seeing that unification of many countries in Europe after this Trump issue coming together. And could be that CY26 could be a surprise for European economy. Early green shoots are to be seen. And if that happens, the agri-related sector can do well. And a lot of chemical companies catering to European markets can also do well. So our sense is that chemicals is one area where we believe near-term uncertainty related to tariffs definitely there. But if you take a slightly longer-term view, I think many companies have created that moat around them. And for the next couple of years, we believe that the earnings growth will be far better than the overall average market growth.
See, if I was copy editing or writing a sales side note, I would call it the Braveheart call, right? That is Pankaj's Braveheart call for the morning. Go with chemicals, look through the noise right now, the tariff noise, and it'll serve you well. But Pankaj, what else? Good morning, by the way. What else? The thing with the market is that the no-brainer trades are not working. Earlier, when there was market uncertainty, when things were off, you would go buy pharma and IT. But now people are very scared to do that. And you'd go buy financials. But look at the first quarter earnings season. There are asset quality issues. Credit costs are going up. Margins are under pressure. So then give us some more names, because the no-brainer segments are confusing right now.
So, Surbi, if you look at our senses, whatever the weakness in economy you are seeing is because of the tighter policy we ran till CY24. And whatever good has happened by RBI and our regulator in the last 4-5 months, you will start to see pick up from September to December quarter onwards is our call. There will be one more quarter of pain on financials, largely the private sector banks, because of the NIM pressure. But third quarter onwards, as the deposit starts to reprice, we will see better earnings growth. And FY27, if you take Nifty as a whole, banking sector will be one of the biggest contributors in terms of earnings growth. The second, our sense is consumption. Though consumption is weak at the ground level, but early green shoots have been started to be seen. Even managements on their conference calls are calling out that rural is doing well, and earlier green shoots are to be seen on the urban side also. So consumer durables, small ticket purchase items, I think all should start doing better as you move ahead into Diwali, Dussehra, and the festive season. So our call is consumption should be one space, especially the discretionary names. And the second part could be financials. You have to bear one more quarter of pain in financials, but December quarter onwards, I think the NIM pressure will subside and asset quality at its peak. I think you will see better times, and credit growth, which has come down to 9%, should start moving to 11-12% is our sense. So these are the pockets where we see opportunity coming in. And last but not the least, I think the pharma and especially the domestic and the CDMO place, I think that's clearly an opportunity whenever market is offering decline in this uncertain environment. That's one other area we should be focused on. So that's broadly is the thought from an overall sectoral perspective. But let me again give you a caveat that this is a stock pickers market. In this earnings season, we also saw the dispersion within the same sector is very, very high. One company is reporting 25% earnings growth, other is reporting a 20% earnings decline. So you need to be very, very focused on which companies you are betting, which promoters you are betting, which cash flows and balance sheets you are betting. In this really next 1 or 2 years, uncertainty, I think managements will play a major role.
Sridhar, you have any likings, anything you'd want
I broadly agree. It's a bottom-up stock pickers market. But broadly, I would say the same. Wherever you have earnings, like power equipment is a space that we like, EMS is a space we like, but they're all very expensive. But they're also showing very strong earnings growth. So they're showing 40+ earnings growth. So I think market's starved of growth. So wherever you're seeing growth, people are just hanging on to it with whatever valuations.
Actually, the other day, we were just counting in the studio areas with 15-20% growth visibility. Hospitals, there's power equipment, and capital market, right?
Yes.
Which is asset management.
Yeah, which is the other interesting space.
Which is the other interesting space.
But it's a cyclical space, right? So you will see ups and downs. But if you remove the cyclicality from there and you say, I'm going to hold for, say, 3 years, 5 years, and you assume that markets give you 12, 13% returns, then they will have that sort of, earnings growth there at least, plus the volume growth of newer people coming in. So it looks interesting, but it's not a straight line. That's what you have to do.
I know, Sridhar, you look at pharma very carefully.
Yes.
So where are we at? Will we get these tariffs on pharma or no? Because it's not, you heard that interview that President Trump gave to CNBC US, right? Towards the end, actually, he said it's coming within the next 1 week or so.
Yeah.
And he said, I like to call them excluded tariffs, this section 232.
So I'll be very surprised. As I said, I follow RFK Jr. very closely. I think they're doing a lot of reforms in the US, specifically when it comes to big pharma. And if I look at the agenda seems to be to bring, the healthcare costs down. I find it strange that it's not like you can replace generic, pharma from India to some other country, because it takes a lot of time, FDA approval. There is a host of things that is to be done. So it looks very difficult to me that it can be done.
You own pharma names?
We do own pharma names, and we like pharma names. So we don't think the tariff is coming, but even if it comes...
It's been an overhang for a while.
Yeah, but I'm just saying, even if it comes, there is no replacement for that. So these drugs will go to the US. Eventually, the consumer will have to pay. Nobody has that much of, margins in India.
Absolutely, and that's a point that I think a lot of the pharma companies have been making as well. They can't overnight replace. And I think Indian drugs comprise almost 40-45% of the total pharma market in the US. So it's a huge number. You cannot replace it overnight. So we'll have to wait and watch. Thank you very much, Sridhar. Great to have you in the studios today. And thanks to Pankaj as well for joining us short notice. But we live in very, very interesting times. So really great that both of you could make it, to us.